Internal Controls to Safeguard Your Business, brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before I introduce our expert panelists and our partner sponsor, let me share some brief housekeeping items. We'll have Q&A at the end of the presentation, so please use your GoToWebinar control panel to ask our experts questions. Next, this webinar is CPE eligible, and we'll have 4 polling questions. So again, please use your control panel to answer each poll, or 3 out of 4 polls. And benchmark your peers. If you're not looking for CPE, please allow up to 5 days for CPE certificates. Also regarding CPE, you'll receive a brief survey directly after the webcast, so please complete that. And finally, you'll receive a link to this webcast via email in the next 24 hours, so no need for notes or screenshots. So with that, I'd like to say a word about our partner and sponsor. BILL, NYSE BILL, is a leading financial operations platform for small and mid-sized businesses. As a champion of SMBs, BILL automates the future of finance so businesses can thrive. BILL's integrated platform helps businesses to more efficiently control payables, receivables, spend, and expense management. Hundreds of thousands of businesses rely on BILL's proprietary member network of millions to pay or get paid faster. Headquartered in San Jose, California, BILL is a trusted partner of leading U.S. financial institutions, accounting firms, and accounting software providers. For more information, visit bill.com. With that, I'm very pleased to introduce our expert panelists. Ali Tayyab is a first-generation immigrant from Pakistan that grew up in the San Francisco Bay Area. Ali studied finance at San Diego State. And since he joined BILL more than 5 years ago, he's worked closely with BILL's customers to help start them on their journey to automate their financial processes. Joe Flesher is Webinar Content Marketing Manager for BILL with more than 16 years experience, including CFO.com and Argyle. Gentlemen, welcome, and Joe, please take it away.
Thank you very much, Neil, for the kind introduction, introducing my colleague Ali and me. And let's talk about what we're going to cover during our webinar. Very excited to discuss this topic. Internal controls are important to everybody throughout an organization, including finance, and perhaps especially in finance. What we're going to talk about today, though, is why internal controls are essential in an accounts payable department in particular, which internal controls are critical. And we're also going to talk about which controls or management of controls or aspects of managing these controls lend themselves best to automation and establishing and maintaining a culture of compliance. So with that in mind, what I'd like to do now is launch into some questions that I have for you, Ali. I know you've had a lot of experience working with BILL's clients on maintaining internal controls and finding opportunities to automate management of internal controls. So I think my first question for you, Ali, is how would you define internal controls?
Yeah, thanks for the introduction, Neil, and thanks for organizing this, Joe. In regards to the first question around internal controls, not rocket science here, pretty obvious answer, right? And the first and most important thing is having internal controls allows you to safeguard your assets, right? The revenue, the assets that you have in your business, making sure that they are not open to, fraudulent practices or risk. Beyond that, ensuring the accuracy and reliability of your financial information so that you have the right insights to make the right decisions, and that those don't become an issue later on down the road. A big one, especially as part of the efficiency conversation, is operating efficiently, right? Creating operational efficiencies around managing these controls, and ensuring the compliance that you have with any laws or regulations that your company is held to.
Thank you, Ali. And I know that there's more because there is perhaps the immediate need to maintain compliance, but there are also implications, and we could even talk about this later, some of the risks. What are some additional implications with regard to maintaining internal controls?
Yeah, so It's more so risk mitigation, right? Like the things that you don't want to have to deal with is why you put these controls in place. And when you don't have them, some things that are really just potentially a minor issue can turn into a huge headache, time suck, and delay in terms of you getting your vendors paid or getting your financial statements accurate, which, as we all know, do come with deadlines and timeframes that they need to get done in. And so a common risk of that is just, for example, check fraud, right? Having an issue with a check fraud can result in hours of wasted time for an accounting team trying to figure out what happened, voiding that check, making sure that their banking situation is addressed so that other payments don't fail, and money isn't withdrawn from the account fraudulently.
Certainly. And then when we consider, let's say, the broader scope, maintaining internal controls is going to have implications beyond finance and indeed beyond people who work for the organization that the finance team is part of. I'd like to give you the opportunity, Ali, to elaborate on that.
Yeah, so outside of your own organization, there are other stakeholders that this information is completely relevant to, right? A part of that can be your vendors and suppliers, the people that you're paying that rely on your business with them to operate their business. So making sure that they get paid in a timely and secure manner is going to be important to maintaining those relationships and growing your own organization. And then there are situations where there are other stakeholders outside of the direct, vendor customer relationship, things like investors, partners, other people that would like to have visibility into the financial situation of the organization, especially for companies that aspire to go public or potentially get acquired. These things are super important information that needs to be accurate.
Absolutely. Well, before we continue, thank you, Ali. Before we continue, let's pose the first of our 4 polling questions. Neil, I'll turn it back to you.
All right, let me launch this poll. My company's AP team has established effective workflows to manage internal controls. Select one of the following. So easy multiple choice. Attendees, please use your control panel.
Thank you, Neil. And I'm looking forward to seeing how attendees respond. We may have some time to comment briefly on how attendees respond. It'd be interesting to see how attendees perceive their organization's AP teams and the extent to which their AP teams have maintained effective workflows to manage internal controls.
All right, we got almost everyone voting here. So let's go ahead and share results.
Well, thank you, Neil. And Ali, before we continue, so this is always interesting to me. There's the perception. So clearly, an overwhelming majority, like 9 out of 10 respondents, have indicated that their AP teams that they perceive that their AP teams have established effective workflows to manage internal controls. My question to you, Ali, before we continue our conversation is, to what extent have you observed that this is actually true? In other words, does perception always jive with reality in your experience?
Yeah, the simple, straightforward answer is no. I think there is a little bit of bias with everyone kind of wanting to think that they have the internal controls in place, but if they really think about it more granularly in terms of the specific workflows and the specific controls that they have in place, I think people often find that 2 things. One, either they do have the operational controls in place, but they don't have the operational efficiency around those controls that they would like, and having to maintain that compliance is actually a lengthy, time-consuming process for their employees that has the room for potential error and fraud around it. And then I think what happens in that same kind of thought is that people don't realize the extent to which they can put internal controls in place. And so, when asked about specific situations, they kind of realize that they actually don't have something in place for that. And it opens up a lot of possibilities to think about.
Exactly. And let's let's dive into those possibilities. Thank you, Ali. Let's consider now, we're going to move on to our next question that I want to pose to you, which is, when we consider possibilities, what are examples, and I know there are quite a few, what are examples of internal controls that concern
Your Wi-Fi might be dithering.
Joe's a little bit. Joe, do you mind repeating that question for me? You cut out a little bit.
Oh, no problem. I was going to say, when we consider all the possibilities, as you mentioned, which internal controls in particular concern accounts payable teams? I'd like to walk through each of them.
Yeah, so I know we went over the 5 kind of main things that come up. So they're listed here on the slide deck for you all to see. The first and most important one, in my opinion, is desegregation of duties, especially for smaller growing businesses that don't necessarily have a full accounting structure or team, right? Where there is a CFO and a controller or VP of finance in place with an accounting team, underneath that. A lot of the people that wear the same hats in the business are doing a lot of the payables end to end. And so you'll find that in a lot of organizations, the people creating the invoices or the bills are the same people paying them, which is often a pretty common accounting rule to have a separation of duties there. But beyond that, there is a requirement, especially at small growing companies, for people to wear many hats and do a lot of different things. And so that's really, another area to discuss on where you can leverage software and automation to make sure these rules are met internally so that you can go about your business in an efficient manner without having to worry about meeting these compliances. So separation of duties is a great one, right? Not having the same person pay the bill that they enter, or at least having in a review or invoice approval process prior to that is another way to kind of allow somebody to do the things that they need to do in terms of wearing multiple hats, but making sure that the compliance is still in place on the back end. Going through kind of the rest of these, right, there is a procurement aspect to internal control. Having the appropriate process in place for authorization for purchases prior to them happening is definitely important, especially as your organization scales and you have larger purchases, potentially inventory, or other items that are involved in the accounting process. Having a purchase order process where the spend is approved prior to engaging with the vendor is definitely an important piece of that. Tying that kind of same concept into your bill payment process. So having the ability to approve bills that are entered by your accounting team by the right people, right? Accounting isn't necessarily involved in every single purchase that the company makes across the organization. It could be related to a different department, a different project, a different, someone within the organization that has the knowledge to say, yes, this is the correct information, we're being billed for the right goods and services, is super important, both from an historical perspective to be able to go back and say, yes, this was properly, approved and then purchased, but also for making sure that things are accurate. You're not overpaying vendors, you're paying them on time, you're making sure that you receive the goods and services that you paid for. And then, just continuing to go down the list here, Joe, before I do that, is there any other comments you would want to add to those first 3 points?
Absolutely. I think so. For example, in the case of purchase order matching, that presumes in many organizations that they are of sufficient size or complexity that they might have additional tools, accounting tools or enterprise resource planning tools, and we could talk about that a little later. So in other words, some of these controls reflect to some extent the size or complexity or maturity of an organization, and then other organizations, as long as they have finance teams, some of the other aspects of maintaining internal controls we're going to go over They do not necessarily depend on the size or complexity. They are typical pretty much of any organization that has something approaching a dedicated finance function. Would you say that's correct?
Absolutely would agree, right? The other things that we talk about here, aside from the purchase order matching, are going to be relevant to almost every single organization you can think of, from a one-man shop to a public 3,000 person company like ourselves. But what you'll notice is that purchase order or procurement processes are very unique and tend to be not only complex to handle, but also not always necessary, right? I always tell my clients when I'm working with them, if you don't need to be using a PO process to manage your inventory, avoid it, right? Because it's going to create more steps and more internal controls that are more difficult to manage than what's necessary. Having the right internal controls in other places allows you to actually eliminate using a procurement process that might not be the right fit for you operationally.
It's a really great point. Before we continue with some other internal controls, I just wanted to give you the opportunity, Ali, to perhaps just briefly cover those that follow purchase orders.
Yeah, so some of the internal controls around purchase order is some of it's pretty straightforward. The first thing that you need to do is make sure that the PO itself is approved internally by the right people. And so typically functionality like that is best automated through your ERP or your enterprise resource planning system. There are plenty of tools out there, softwares that are focused specifically on the purchase order creation, management, and inventory tie-in. And so there's always options to consider, right? Whether that's within the system you're already using or something externally. But I would definitely highlight the fact that you don't want to move to a PO process unless it is necessary for the functions that you're utilizing within accounting.
Absolutely. Okay. And then moving on down to vendor list or vendor master file management on down, and then we'll consider some other internal controls as well.
Yeah, and this is one of my favorite things to discuss. Vendor master file management is kind of a broad term, but I like to just call it vendor management, right? How are you keeping track of which vendors you have in your system, how and when you're paying them, and any other information that might be specific to that vendor. And reason I say this is one of my favorite things to talk about is how well Bill as a platform addresses some of these situations. One thing I hear all the time, even to this day and age, is that companies are still sending paper checks because they don't have the right process in place to move their vendors to ACH payments, or the process that they have to do to pay their vendors via ACH is just so operationally inefficient and creates so many steps and confusions that people stick with their checks, even given the kind of manual work that's involved with sending a check. And so a couple things to highlight around vendor management. One being the big topic of how do you get your vendors' banking and routing info set up appropriately without mishandling that information and ensuring that that information is accurate, so that you're not paying the wrong people or that there's no issues with that. A system like Bill allows you to automate that process by taking the responsibility of collecting and entering your vendor's banking and routing info off of your plate and allowing the vendor to do that themselves while still having the compliance checks for the information on the back end automated for you. That's one way to handle it. That's how Bill.com does it. Now, there are other things related to vendor management that you're going to want to have internal controls on. One of those things is tax compliance, making sure that you have the right supporting documentation or W-9s from that vendor and that they are marked as a 1099 if they're not an employee or a W-2 employee. The other thing is managing changes around that. So one of the internal controls that people love about Bill specifically is that if a vendor changes their banking information, you are notified. So if you feel like there's suspicious activity, you can confirm with them before paying them again. Or if internally you are managing banking and routing info yourself, you can require layers of approval, if not just one, to approve the change of vendor's banking information being changed. For example, I can't go in, change a vendor's banking information to my own and then have you guys pay me to my bank account without, let's say, Joe or someone else within the organization approving that change. So vendor management, definitely a big aspect of your internal control, and an important area for you to have real-time insights around. And then that kind of goes into the next step of payment authorization, right? A lot of tools out there can offer you a invoice approval workflow. It's not rocket science to create something like that, right? But having the ability to do that in an automated fashion, make it easy for those approvers, and then flow directly into your actual payment processing with all of that information there, makes things a lot more streamlined, clear, and easy to navigate. And you can even put in an additional layer of control around the release of payments themselves. So there's one thing to talk about invoice approval, right? Like, hey, this specific bill is good to be paid. You know, we got the service, etc. And then there's the more high level strategic management of the cash flow. Hey, how much money do we want leaving the bank this day or this week? When do we want to schedule our payments to be strategic about our cash outflow and inflow? And, you know, having the visibility and control to say yes or no, these payments are good to go, is awesome to have in one system, but definitely an important aspect of your internal controls. And then, you know, the last one is pretty self-explanatory, right? You obviously don't want to deal with duplicate bills because that's more data entry for you. And then on the flip side, if you end up pushing that bill through and paying it, now you have a duplicate payment. Always easier to, always harder to get money back that you've already sent than to, you know, the opposite. And so making sure that you're not wasting time entering duplicate bills or spending time processing duplicate payments is definitely a bonus and something every system should have, but absolutely something that you can accomplish with a system like Bill.